Today, we're going to be going into letters of intent, what they are, how to use them, structuring them, all of that. And so we're going to cover that because when you are making offers, you definitely want to use this to your advantage. So after this live today, right, the goal is that you know exactly what to do with a letter of intent and that you can go out, take it and start making offers with it if you're not already. I've got a template, right? So I've got a template model that I'll share. You stay to the end. I'll go ahead and share that with the group. At the end, I'll also walk through that model. So once you have it, you actually understand, okay, here's what I need to do in order to use it. Here's how to structure it, what to fill in and what not. So my name, Jason Stubblefield. I have been buying multifamily apartments since 2016. Put this group together. It was a live group. Now we do it sort of virtually, but the whole thing is about sharing information about multifamily investments and helping people grow their portfolios, right? So if you want to know a little bit more about me, here is our website, snscapitalpartners.com. That's Sam, Nancy, Sam, capitalpartners.com. You can go there. You can hear about some of our testimonials from investors, projects that we've done, read up a little bit about me, what I'm all about. And then also, if you go over to the Invest tab, if you are an investor, you're looking to hear about passive investments, we have exciting opportunities. And so if you go to join our community, click on join now, you fill out a brief form that puts you into our database. And that way, when we do deals, you can hear about those and then reach out to see if that's something that you are interested in or not. All right. So let's get rocking and rolling. We got Atlanta in the house, Richmond in the house. Okay, let's talk letters of intent. So first of all, a letter of intent, or LOI as you call it, is what you use in the preliminary portion of making an offer to a broker. So unlike residential, where you write the whole contract out, you really start with just this letter of intent. And the goal with this is that you get some sort of initial negotiation started with the broker. Now, in a little bit, I'll show you how that works and how you want to strategize these things together. But we'll talk about that in depth in this training, and then I'll also share that live example as I mentioned with you. And then I've also got a few real ninja tricks that I'm gonna share with you. So I don't know why that's funny to me, real ninja, but yeah, I'm gonna throw in some real ninja tricks for you, and you can go ahead and use that, right? So you'll see how we do all this to structure deals. So letters of intent are prior to the formal contract. It's more like if you were in elementary school, like, you know, you passed a note to a girl, hey, I like you, do you like me? That's sort of what you're doing. All right. It's just like talk to the broker. Hey, this is what I'm thinking about. These are my initial terms. They tell you back if they like you or not. And then you sort of know if you're in the ballpark of that deal. Also, you should note that this is not a legally binding contract. Okay. So letters of intent, no matter what terms you're in, you aren't held to them. You can't take them to court. Nobody can sue each other. This is very, very much just preliminary. However, it's serious. All right. And I'm going to talk about why you want to treat it serious in just a little bit. So let's talk about how you even get to a LOI. When you're going out and you are pursuing multifamily properties, a lot of times you may see properties that don't even have a asking price on it. Okay. The broker puts it out and they'll say to BD. All right. TBD, to be determined by the market. And so with that, what do you offer, right? Where does your asking price going to be? And so we start off every time we get a deal from a broker that does not have an asking price. We start by calling that broker and asking what the whisper price is. If you are not doing that, you're probably leaving a bad reputation on that broker, because that's what most people who buy real estate, they do. They're going to call and say, what's the pricing guidance, or what's the whisper price? You can use those terms interchangeably, right? But that is where the broker's going to tell you what the seller is looking for, or where they think this property is going to trade at. And the last, brief history, how they got there, I think maybe call it 8-9 years ago, you would see a lot of deals that had the price tag on them. But as markets start getting competitive, like, hey, they may put a deal on the market for 10 million, it may sell at 12 million. The market was extremely hot, interest rates were getting lowered. So they just stopped putting price tags on properties and put them out without a price tag and just let the highest or the best offer win. Okay. When it comes to whisper price, they know a number. Right, so you want to call that broker, sort of see what this number is. Where do you think this property would trade at? And then when you get into your underwriting, that's when you'll see, can I hit this number or can I not? When you're doing that initial talk with the broker, if it's not on the offering memorandum that you got, you also want to ask them when the call for offers date is, right? So usually they say, we're bringing the property out, we're going to leave it on the market 60 days, have your offers in by whatever date. Okay. And so my company, the way we do it is somewhat different. Now, I've seen other gurus that say, hey, just make offers. You can't buy any deals without making offers. So take an LOI, it's non-legally binding, send it out to the broker and see what sticks. I don't recommend you do that at all, because even though it's not legally binding, your reputation is attached to it. And so if you send out, if you make yourself the person, make yourself known for being the person that just throws out lowball LOIs, well, what's going to happen is after you do that to one particular broker so many times, they're just going to stop taking your offers seriously, or even stop taking your deals, answering your emails, phone calls, whatever. So what we do is we treat a LOI just like a real offer. And so to do that, you want to make sure that you know a certain amount of information prior to that. You basically want to put out a number that you stick to, a number that you believe in. So you're like, all right, if I'm buying this property, let's call it 10 million or whatever, I feel confident that I can buy it for 10 million, or I will not submit my LOI. In this beginning process, let me back up a little bit, right? So we talked about whisper price and the call for offer date. But when you talk to the broker, one other thing you may also want to mention is, are they willing to preempt the sale? And so when you say preempt the sale, a lot of times owners, when they want to get the best price, what they're going to do is they're going to say, hey, here's the date. We're going to cut this deal off. We'll take the offers that we have, and we will determine who we're going to sell it to. But sometimes you'll find sellers that they have their number. They may say, we just want 10 million on this deal and we want to close quickly. So when you talk to a broker, you ask them, is the seller willing to preempt the sale? Right. And I found out about this the hard way, because you may have a great deal there. And if you can get your offer in early, you may be able to get your offer accepted before they even get all the other offers. So that's just another tidbit to sort of know. But back when it comes to submitting your LOI or preparing for your LOI, make sure that you do your homework. You want to know what the crime is in the area, the income of the area. You want to know your taxes, your insurance, what the property management company is going to charge you, your rents. Like, we treat that LOI like a real offer, because you don't want to stick your neck out, say, all right, I'm going to buy this for whatever price, then come in and find out that the deal was in a war zone that you don't even want to be in, or that it's in an income area where people are only making, $20,000 a year or something like that. And you don't even want to own that. Your property manager won't manage a property like that. All right. So do your homework first, treat it like a real offer, then submit it. In your LOI, you're going to have the key terms and conditions of the purchase, right? How much you're going to purchase it for, what's your earnest money deposit going to be, is your money going to be hard money day one, or is it not going to be hard, your inspection period. Very general terms, but you're going to put that into your LOI. And then also, if anybody has questions about this, whether you're on Facebook or if you're on Zoom, drop it in. I hate for you to take time out of your Friday, especially a busy Friday, and then not get your questions answered. So I'll also go back and do a little Q&A at the end. But yeah, go ahead and drop that if any of this is sort of going over your head. So when it comes to crafting the LOI, I've talked before about don't burn bridges. Okay, so make sure that you are treating it seriously. All right, so here is my ninja trick number one when submitting an LOI. If we're off, let's say, and by off, I mean if I don't feel like I'm going to be within a few $100,000 of that whisper price, what I'll do is I'll call up the broker or email the broker and says, here's where we are. We're we're $500,000 off, or we're $1 million off, or this is the best that we can do. And then I ask them, do you want me to send the LOI? Right? Because what you do here is, without burning the bridge, you're telling the broker that, hey, I can't get to your asking price. And sometimes you'll really be able to gauge whether the broker believes that the property is going to trade at that amount or not. Right. So if it's a $10 million deal, you say, I can only get to 9 million. If the broker knows that it's going to trade over 10, it's probably going to tell you, don't even worry about it. Or we have other offers in that are above that. Don't waste our time. But sometimes you'll find they'll say, go ahead and send it over. So we talk about not burning the bridge. This is a tactic that you can use, for one, to gauge where the broker thinks the property is going to be at, but two, to not burn a bridge by just throwing out a LOI, saying nothing about it, having 10 other offers come in at whisper price, and you're the one that's just the outlier that's just extremely low. So use that as a tactic. And then here's my ninja trick number two. Real ninja trick. That's what I should call it. Real ninja trick number two is that if I have an offer that I like, which usually if we make an offer, it is something that we like, we don't just submit the LOI, right? We'll submit the LOI, but then we'll also include our lender term sheet, proving to the broker that we've already got our loan, our debt lined up, right? So they're able to see the lender letter. All right. We will also include like a team bio. Here's our team. Here's some of the deals that we've done before. Proof of funds letter, right? So basically you're juicing up that LOI. And I've even done a personal letter to the seller with the LOI. Now, a lot of times we say just throw out LOIs, and that you can do that. But any of those, whether you put out a lender term sheet, that's probably the most powerful. Lender term sheet and proof of funds really show to the broker that you're serious. And then with that, even if you don't win that deal, that broker knows that, okay, you're a real buyer, and they're much more likely to work with you on future deals. But when you think about it, everyone else is sort of just submitting LOIs, just that one piece of paper, and you come in with this added information. Here's my proof of funds. Here's my term sheet from my lender. You stand out, right? And now in a competitive market, you've got something that you can use to sort of stick out and be able to come off with a better position compared to everyone else who submitted, right? So those are a couple tricks. Throw out. That's free. Y'all ain't got to pay me nothing extra for that. It'll just be what it is. All right, moving along. So you want to know when that call for offers date is, right? If they're not going to preempt the sale, know when the call for offers date is. And then what we'll do, if we have wiggle room, which there usually is some wiggle room, we will call the broker to ask what the cutoff is. So what do you mean the cutoff? In our example, we're talking about a $10 million deal or something, right? We'll say, what numbers are you at? Like, what number do you think we should be at? And this is such a conversation. You have a relationship, or we're thinking about submitting a final offer here, but they may tell you all our offers are at X amount. And so if you want to be in the running, if you want to compete, you need to be at this amount. And it's just a small tactic that you could do, before you let that LOI fly, just to make sure that you get into the next round. Some of you may not be familiar with what the next round is. So let's talk about that a little bit. You have your call for offers date. Right, that's when you're gonna submit your LOI. Then they'll take that group of people who offered on the property, and then they may have what you call a best and final round. And so let me preface this too, because some people here are just getting started. Usually the larger the property is, the more sophisticated the buyer, that's when this process will come into play. From some of the smaller deals, maybe 30 units, 20 units, it just depends, but they may not have this best and final stage, but you still should know it and be prepared for it just in case it does become competitive, right? So you have a best and final. They take the pool of buyers that submitted LOIs, and now they say, out of these, we're going to narrow that down to another group of who we like, right? So your first goal is just to get to that best and final. Then after they invite you to the best and final, there'll usually be a best and final, right? So now you are submitting again, saying like, okay, we narrowed it down to 3 out of you 3 groups. Who can do the best, right, out of that? And then if that offer is still good for the seller, right, you're still in the runnings, then they have what you call a seller call, right? And so you'll get on the phone, usually with the broker, with the seller. They'll ask you some questions. How are you going to fund the deal? A little bit about your team. And that's when you really want to, in our case, we've already submitted a lot of these things. How are you going to fund the deal, track record, all of those. But having that conversation, telling them your plans with the property, oftentimes can sway a seller one way or the other to get you awarded the deal. So does that makes sense to everybody? One says, thanks. Do you have the financials? Okay, Jeremy says, do you have the financials of the property to identify valuation before sending the LOI? Absolutely. Absolutely. We treat LOIs just like deals. All right. So we want to stick true to what we say. And before we do that, thorough underwriting. If you find yourself submitting a lot of LOIs and never getting any of them submitted, it's probably because you're using a tactic like that. And what do you offer if you don't know the deals, right? I mean, if you don't know the details of the deal, because commercial real estate is all based off the income. All right, so let me bring this up for a minute, and I'm gonna just run through my model, point out what we're doing. Renisha wants the recording. Yes, please send me your email. We'll make sure that you get that. Boom. So let me share my screen right now. Okay, am I sharing? Can y'all see my screen? Okay, I got head nods, thumbs up. All right, cool. So here is the letter of intent. I always start out pretty simple. I like things being simplistic. I don't worry about anything that is not highlighted. We only touch the things that are highlighted, and that is for each offer, right? So letterhead will have the name of the broker, the title. Letter of intent is for the purchase of the property name. So we'll put the name of the property and the address. The only thing we're going to change, keep the format the same, we're moving right on. You'll talk about who your company is. That's pretty self-explanatory. And then we really don't get sort of serious. So we talk about the purchase price. What are you gonna offer on this property? This is where we start off at. And then we talk about earnest money. Earnest money is usually going to be somewhere between 1 to 2% of the purchase price is what you'll want to put for your earnest money, right? And so the more competitive the deal, you've seen, I've lost deals because people have gone way above that 2%. So it's really, what are you comfortable with putting down as an initial earnest money deposit? Then you have the down payment. So here you're telling the broker what you think the initial down payment would be. Is it, in this case, we're doing 20%. It could be 25%, 30%. You just want to let them know, and then your mortgage amount too. So in our case, if you have a lender letter, you want whatever the lender has proposed to you to be your first mortgage year. So that just lets them know pricing. Then I put in this earnest money. So now we'll talk a little bit about the earnest money. This earnest money is going to be either non-refundable or refundable. And I would say in a competitive market like it has been, and I believe it'll continue to be that way, non-refundable earnest money is something that you can do or not do. But if you are doing it, you really want to make sure that you understand the deal and that you're prepared to buy. So basically what you're saying is, I'm so confident in my ability to buy this deal that we will put down this money. And if we don't buy it, you can just keep the money that we put down and walk away from the deal. It's a way to persuade sellers that you are a buyer and that you're legit. So I'll throw in another little tip that we do. So we will, if I like a deal, we'll put in non-refundable earnest money, but understand this as an LOI, and then we're going to have an official contract. And I know that it's probably going to take us, at least a week or so to do to get the contract. So during that time, I'll send on a follow-up agreement saying, give us access to the property. And during that time, we'll come in and do due diligence, walk some units, as much of an inspection as they'll let us do. That way we feel good about it. And so it's a way to make your offer stick out, but at the same time, protect yourself. That's free as well. Just take that. But here's your earnest money. You can take this out, right? And just say, I'm doing earnest money. Now with interest rates increasing, you definitely want to be careful with that. So we're doing it, but if you're beginning, I would very much tread lightly on doing that. Okay. So you tell them what you're going to do, when it's going to hit escrow, inspection period, right? You're going to do an inspection, but we typically do 30 days. Sometimes they may beat that number back and want us to do a faster inspection. That's okay. But that's mainly it. Okay. You call with your name, title, signature on this. And then in the LOI, and I'll share this with those who want it. If you're on Zoom, just put it in put your email in the chat. If you're on Facebook, just go ahead and drop your email there. If you're on Facebook, it'll probably come out as a Facebook message, right? But so you have this LOI here, and then we don't touch this stuff, but we put it in all of our LOIs, and mainly letting them know that, hey, we want this due diligence information. So we want property taxes, licenses, leases, certain studies, all these things that we're going to do. But we let the seller know that ahead of time. That way there's no hiccups coming later, right? And you want to do that. If you're in some of the bigger properties, they already know, but we just like to spell it out. On some of the smaller properties, though, they may not have these things. All right. And so if they don't have what we asked for here in the LOI, one, bargaining, we can say, well, we told you this in the LOI. We said we wanted to have, copies of all the leases. Now you say you don't have the leases. That's a problem, right? It also helps you with positioning with a broker. Letting them sort of know that, hey, this buyer understands commercial real estate and they know what they want. All right, so cool. We're gonna wrap this up. Let's see if we have any questions here. Oh, there. I see just a couple emails. So Chris Kelly, I got you. Let's see, Renisha. Yes, we'll be sending that out. All right. So that is it. Just want to be quick, but I think if you take this, you apply it, it'll definitely help you as you grow your portfolio. Use this template, build out your team, use this LOI to go ahead and make offers, and best of luck to you on your future deal. So that's it for now. I'll tag in with y'all next week. Have a good one. Who's still here? Okay, all right, they still got you. I almost forgot with this, but anyways, if you are looking to purchase commercial real estate, multifamily deals, you need some help with that, our team may be able to assist. So just reach out, whether that be through Facebook or via email. And then another question, you got me. I got like 3 minutes before I hop out of here. Would you send your earnest money deposit along with the LOI? No, absolutely not. That earnest money deposit is going to go into an escrow account. At this point, you don't even have the escrow account established. You're not talking about attorneys. This is non-binding. Remember, so this is not a legally binding contract. You're just telling them what you're what you're going to do, what you anticipate doing, and then when you get to contract, that's when you actually do it. Right. So at contract, that's when you would put that earnest money deposit in there. Good thinking though. I definitely like that train of thought, right? How can you get aggressive to win deals? Yep. Best thing if you want to get aggressive is going to be either increasing the amount of earnest money or being willing to place some of that earnest money as non-refundable. But understand that you can have a little due diligence and wiggle room in that so that you don't put it as in jeopardy. All right. So y'all have a great weekend. Be the best version of you because it'll make you the happiest. And I'll chat with y'all later.